Welcome to the Knowledge Hub. Don't forget to subscribe and click the bell icon for more updates and thrilling short scenes. For over a century, the Panama Canal has been a vital artery of global commerce, connecting the Atlantic and Pacific Oceans and saving ships weeks of travel. Every year, hundreds of billions of dollars in cargo pass through its locks, making it essential to the world's supply chains. But recently, the canal's reliability has been threatened, not by engineering or politics, but by nature. The canal depends on vast amounts of fresh water from Lake Gatun, and in 2023, Panama faced a historic drought. Water levels dropped to record lows, forcing the canal to slash daily ship transits and creating massive traffic jams at both ends. At the peak, over 200 ships waited for passage, costing billions in delayed goods and upending global logistics. The crisis exposed the fragility of a system the world took for granted and highlighted the risks of climate change to global trade. The drought wasn't a fluke. It was a warning that the canal's future is uncertain. As we look to 2025, the question remains, can the Panama Canal adapt, or will the world need new routes? The search for alternatives has become urgent, igniting a race to control the future of shipping. The world's supply chains are at a crossroads, and the stakes couldn't be higher. The era of easy passage through Panama may be coming to an end. The slowdown in Panama sent shockwaves through the global economy. Shipping costs soared as fewer transit slots drove up prices, with some companies paying millions just to jump the queue. Others rerouted ships around South America or through the Suez Canal, adding weeks and burning more fuel. Delays rippled through industries. Manufacturers faced shortages, retailers risked empty shelves, and energy exports stalled. The just-in-time logistics model, built on predictability, began to unravel. Companies scrambled for parts, exposing the dangers of relying on a single choke point. The crisis made it clear. Global trade needed more resilience and redundancy. Shipping lines and customers urgently sought alternatives, turning theoretical debates into real-world necessity. Could land routes or new canals break Panama's monopoly? The world realized it could no longer depend on one narrow waterway, especially as climate change makes disruptions more likely. The race for a new Panama was on, and the search for alternatives had never been more pressing. The future of global trade was suddenly up for grabs. As the world searched for alternatives, Mexico's interoceanic corridor of the Isthmus of Tehuantepec, CIIT, stepped into the spotlight. Unlike a canal, CIIT is a land bridge. Cargo moves by ship, train, and ship again, crossing just 300 kilometers between the Pacific and Atlantic. Backed by massive investment and a key partnership with China, the project is part of Beijing's Belt and Road Initiative, giving China a strategic foothold in Latin America. The corridor aims to transform southern Mexico into a global trade hub, modernizing ports, railways, and highways. The plan includes new gas pipelines, fiber optic networks, and industrial parks to attract manufacturing. For high-value time-sensitive goods, CIIT promises to move containers between oceans in hours, not days. This could be a game-changer for trade between Asia and the U.S. East Coast. China's involvement has turned the project into a geopolitical flashpoint, closely watched by Washington. For Mexico, it's a chance to spur development in a long-neglected region. For global shipping, it's a new option that could reshape trade flows. The CIIT isn't just a regional project, it's a bold bid to challenge Panama's dominance. The stakes are global, and the competition is heating up. The interoceanic corridor is all about speed and integration. Ships from Asia dock at Salina Cruz, where containers are quickly transferred to freight trains. The trains cross the isthmus in a few hours, reaching Coatzacoalcos on the Atlantic, where cargo is loaded onto ships, bound for the US or Europe. This bypasses Panama's congestion and water shortages entirely. The $50 billion project, heavily financed by China, includes deep-water ports, new terminals, upgraded railways, and 10 industrial parks. The first phase is already operational, with full capacity expected soon. CIIT is ideal for containerized goods, not bulk commodities like grain or LNG, so it targets a lucrative slice of the market. For the US, a Chinese-backed corridor next door is a geopolitical challenge. For Mexico, it's a shot at economic transformation. For shippers, it's a welcome alternative that could cut costs and boost efficiency. If CIIT delivers, it could shift major trade flows away from Panama and redraw the map of global commerce. The corridor's success could set a new standard for how goods move between oceans. The world is watching to see if Mexico's gamble pays off. Before Mexico's land bridge, Nicaragua dreamed of its own canal. For over a century, plans to cut a waterway through Lake Nicaragua surfaced, but none materialized. In 2013, a Chinese company, HKND Group, promised a $50 billion canal, bigger than Panama's. Hope soared, but the project quickly unraveled amid financial doubts, lack of transparency, and massive environmental concerns. Scientists warned that dredging Lake Nicaragua could trigger ecological disaster. Despite a flashy launch, construction never began. By 2018, the project was dead. The Nicaraguan canal remains a cautionary tale, ambition without resources or public support. Unlike Mexico's tangible progress, Nicaragua's canal is a phantom, highlighting the immense hurdles of building a new waterway. The lesson: grand visions need more than dreams. They need money, trust, and environmental care. For now, Mexico's corridor is the only real challenger to Panama's reign. Mega projects like Mexico's corridor and Nicaragua's canal come with real human and environmental costs. In Nicaragua, the canal plan would have displaced tens of thousands, sparking fierce protests from farmers and indigenous communities. Fears of water contamination and loss of livelihoods helped stall the project. In Mexico, similar concerns shadow the CIIT. Locals worry about land grabs, pollution, and the destruction of rainforests and wetlands. Activists warn that economic gains may come at the expense of communities and ecosystems. Governments tout jobs and growth, but locals demand respect for their rights and the environment. The core conflict: national ambition versus local well-being. The challenge is to balance development with sustainability and inclusion. The true cost of these projects will be measured not just in dollars, but in their impact on people and the land. As Mexico pushes forward, it faces a test. Can progress be achieved without sacrificing its soul? Mexico's interoceanic corridor marks a turning point in global trade. For the first time, the Panama Canal faces real competition, especially for container traffic between Asia and North America. This rivalry could lower costs and make supply chains more resilient. The world is moving from a single choke point to a network of routes, forcing Panama to innovate. Panama is investing in new reservoirs and water-saving locks to secure its future. Meanwhile, other alternatives are emerging. U.S. rail land bridges, Colombia's maglev proposals, and even the Arctic's Northwest Passage. The future will be a mosaic of routes, not a single path. The era of total reliance on Panama is ending, not from failure but from a changing, complex world. Climate change, geopolitics, and technology are redrawing the map of trade. The competition between Panama and Mexico is just the beginning. The winners will be those who move goods fastest, most reliably, and with the greatest resilience in an uncertain world.